Today, we saw the volatility index spiking up higher, the fear and greed index moving closer towards neutral territory. And when we look at stocks across the board, there was nowhere essentially to hide today. And the main question is, was today nothing more than a trap? And judging by the comments down below, we'll know who watched the video all the way until the end. Now, when we look at how the indices fared across the board, the Dow was down 409 points, NASDAQ down 296 points, S&P 500 down 53 points, with the Russell 2000 being down 1.9. Now, we look at advancing issues versus declining. We had 76.8% of issues declining on the day. Then we come over and we look at the sectors across the board, and what do we see? Well, essentially real estate and utilities were the only sectors in the green today. Everything else, and it was sell, sell, sell. Now, starting off this morning, we had a little bit of news come out. We've been very light on news this week, and essentially today, all we had was FOMC members speaking along with existing home sales. And look at home sales. Came in at 3.84 million versus a forecast of 3.88. Also showing a decline from the previous reading. Now, we did have the beige book come out as well, but tomorrow we have even more economic news on deck. Starting off at 8:30, we have the weekly unemployment claims, but then as we look at 9:45, we have PMI numbers coming out, and we'll see, is this going to be enough to sway the markets one way or the other? Now, when we come over and look at a chart of Apple, we can see Apple today was on the move lower, and we come over here and we put on the 9 count, which I did a video about this over the weekend. We can see right here, we had a 9 count, and then the market started to come back lower. Now, has the market fallen enough, or are we about to see a waterfall effect and see stocks going substantially lower? We can see right here, prediction, Apple stock will be below 200 by the year end. And if we look right here, that is substantially lower than where Apple is currently trading. We come over and look at Nvidia today. Nvidia also suffering a pullback down 2.81%. And if you notice, the MACD indicator is just starting to curl over. And you may be asking, Mike, what is causing all the problems out there? When we come over and we look at the dollar index having another strong push out there again today. However, there was a little bit of a change in tone because we come over and look at gold having a bearish engulfing candle. And now if we come over and we look at that same 9 count indicator on gold, notice today formed the 9 count. So is that all she wrote? Are we going to actually see gold fall a little bit short of that ABC projection up here at 2782? Let's not forget, we are in the midst of earnings season, and after the bell, we have Tesla, we have Lam Research, we have IBM, just to name a few. And when we come over and look at Tesla, notice we talked about this morning, dreaded H pattern, but look where Tesla is trading after hours. Big gap on the way up 11 points on the session. We see this big rocket ship of a candle on the way up. Now, is that going to be enough to come over here and fill the gap? Because keep in mind, if Tesla opens with a large gap out here for tomorrow, now we have a conundrum. Do we come down to fill the gap that we're forming now? Or do we start to work on some of these gaps that are slightly above us? Then we come over and look at IBM real quick. IBM has earnings after the bell. We see IBM's down $1.34, not getting the same reaction that we saw out there with Tesla. Then we come over and look at Lam Research on the daily chart. Notice we have this bottom 1, bottom 2, bottom number 3, and you can see we have MACD divergence along the way. We look at the response after the bell when earnings come out. Boom, big rocket ship on the way up. Now we come over and start looking at some of the indices like the diamonds, the Dow Jones. We can see we've had this move down, but a common theme that we're going to see across the board, we're going to see wicks on the bottom of the candles. So are we going to see this as being a bottom? We start going back up, maybe producing a lower high, and maybe even like a little head and shoulders, left shoulder, head, right shoulder over here. Because also with the wicks on the bottom, like we see right here on the IWM, came right down to the 78.6, forming a hammer candle. Now this is day 5. We have 5 consecutive down days in a row. Now, don't get that twisted. We can have 6, 7, 8, 9, 10, 12, 100 down days in a row. But the more consecutive down days that we get, the more likely we're getting very close to a bounce in the market. When we look out here on the 30-minute chart, you can also see the MACD indicator is starting to firm up here just a bit. We actually have a bullish cross at this moment. So maybe the news tomorrow will actually help sway the market a little bit higher, and the fact that maybe some of these earnings are going to be a little bit more celebrated. Let's not forget though, tomorrow we have more earnings coming out. I'm really going to be interested to see how UPS reacts after their earnings. Keep in mind, FedEx came out and said, we cannot give any guidance, and the stock went tumbling lower. And if UPS has negative outlooks moving forward, what does that mean for the economy? Are we already in a slowdown? Now, I want to make everybody aware, Apex having an 80% sale off all their evaluation accounts, passing as little as 1 day, and $85 activation fee across all account sizes. Now, if you like the larger accounts, the 150, 250, and 300K accounts, after using promo code Mike, you will get them for only $50. So to take advantage of this offer, use the link in the description box down below. Use promo code Mike at checkout. We come over real quick and we look at the QQQs, and let's talk about a potential trap, all right? And that is the case that we've been consolidating up here at this area. Now, if I go ahead and basically draw this out like this is going to be our consolidation box. Now we've spiked below it. So are the bears, the lower level bears, essentially trapped, and we're going to see it running up higher? I know what you're thinking by the thumbnail. You were thinking I was saying everybody was trapped to the upside, which they could be too. However, look at that 1 hour chart. MACD indicator is below the zero line. We've had quite the movement down today, and I don't do well when the markets only move in one direction, as you guys saw during the last part of today's live stream. Now, speaking of live streams, if you don't want to miss the next live stream, make sure you're subscribed and you have the bell notifications turned on for all. But now we see the MACD indicator down at these lower levels and basically trying to flatline out, which also would set the stage that maybe, just maybe, anybody shorting down here could be caught on the wrong side, and we see the markets heading up higher. Now, one thing we would want to pay attention to is tensions going on in the Middle East. That would be a problem moving forward. Now, we come over here and we look at the weekly volume profile levels, and notice the developing profile this week is very thin all along this area. Also, one of the areas I would want to target would be this structure breakdown point. We've already made it back above it, but we have some other structure breakdown points. I'm actually going to lump this all together. Candle wick right up here to the candle body. Now, that zone is going to be anywhere from 20,346 up here to about 20,382. Then if we grab our Fibonacci retracement tool and measure this leg down, notice the 50% level comes right within that area. The 61.8 is slightly above that area, which could still be in the context of the market heading lower. This could be setting up an ABC pattern on the way down. Again, we have to wait and see. We need to see more evidence at this point. Now, this chart may look a little bit messy, but this was from today's live stream. And one of the targets I was trying to focus on was a minus development area right here. I got skunked out twice, and then finally I said, you know what? I'm done. Then the market goes a little bit lower, and then we finally came up and we took out 2 of those minus development areas. Let me go ahead and clear this chart off for us real quick. Now, one thing that we're looking at is notice where value area low is, 20,218.75. Right now, we are currently above it. So if we can stay above that area tonight, I'm going to want to focus on all these minus development areas as potential targets. So if you guys join me on tonight's live stream, you guys will see me trying to target those areas. The point of control is way up here at 20,432 and a quarter, with value area high being up here, 20,535.75. Now notice the range today, 463 points. If we zoom this out a little bit, this is one of the largest ranges we've seen in a while, even larger than we saw on October 15th. And notice what happened then. We rallied up a little bit in Asia. Boom, we overshot the lows, and then we started to go back up. And we'll see if we have another situation similar to that. Now, as we come over and look at the SPY real quick, we can also do that same type of drawing, a little upper level consolidation. You see we spike below it. Do we get back above it? If so, the bears potentially could be trapped, and then we see the markets trying to run back up towards all-time highs. Keep in mind, around the elections, they're going to try to keep the markets up higher. That way, the people in power have a better chance to get reelected. If the markets are all going to hell in a handbag and people see money flowing out of their 401ks, then it's going to make their voting decision a little bit different. Then we come over and we look at this on the 4-hour chart. MACD indicator just starting to turn a little bit lower. But then as we dive down and look at the 30-minute chart, what do we see? The MACD indicator well below the zero line, looking like it may want to turn and come back up higher. Now, we did close right near the point of control, and tomorrow we'll be talking about this potential gap. So hopefully you guys join me tomorrow on the live stream. But tomorrow, as long as we're above value area low, I'm going to be looking for higher prices in this market. As we dive down and we look at the 4-hour chart, let's talk about some of the things we talked about in this morning's live stream. The first 30 minutes is usually the analysis part. We had top number 1, top number 2, and I said if we break this area here, then we have a double top. We have confirmed that price pattern, and if we got below this swing point, look to target the minus development area and the point of control, we went way beyond all those targets. But let's go ahead and map back out where that double top pattern actually completes at. And that would give us a price completion at about 57.72. So that basically says, you know what? Maybe we're not done going down just yet. However, if we're going to bounce up and form some type of, ABC pattern down to get down towards that price point, let's talk about some zones I would want to pay attention to off the 4-hour chart. The first one would be anywhere from a price point of about 58.50 up here towards 58.55. And that's just basically measuring from candle wick to the candle body. Well, we have the same structure breakdown point right up here, slightly higher as well. And that's going to come in somewhere in the ballpark of 58.60 all the way up here towards 58.66. So again, we have two targets up above. And if we grab our Fibonacci retracement and we measure swing high down to the swing low, notice the 50% level comes right in the middle of that first structure breakdown point. The 61.8 is right near the upper part of that second structure. So we'll see, if we can get a bounce up towards those areas. Now, when we come over and we look at the daily profiles real quick, notice we had a pretty good recovery off the low, and we can kind of see that structure breakdown point right over here. Now, when the markets just go down, 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 no waves back and forth, this is not my type of price action. And you guys can see it from this morning on the live stream. I took very few trades. Then in the afternoon, I gave back some of my gains, still closing out the stream in the green. However, we can see now we've had 1, 2, 3, 4 candles on the way up. Do we start to get a little bit of a pullback, maybe even a double bottom? Then we start going back up. What I'm going to say is I want to give some of those targets that we talked about on the 4-hour chart a little bit of time to potentially play out. And I want to try to aim for those targets as long as we can stay above value area low at 5802.75. The point of control will be 5837.75. Value area high is going to be 5859.75. Also, I'm going to want to focus on some of these minus development areas. And I really like the one right over here because that brings us right into the ballpark of where we had that structure breakdown point off the 4-hour chart. Now, when we look at this area, keep in mind, we said 56 to about 58. Look over here on the 4-hour chart. All right, 58 is going to be right up in this zone, right up in here. So that gives us right within the same ballpark that we were already looking at. Now, if you guys want to learn about an indicator that called the stock market crash of 1987 and the dot-com bubble burst and the bottom after that crash, watch this video right here.